Neeraj Diwan joining us. He's market expert. Neeraj, before I come to you on Oracle, talk to us a little bit about IndusInd. How are you looking at those numbers? A turnaround likely at play. We've seen target price increases across the board. Give us a sense how you're looking at this one.
Yeah, good morning.
Good morning.
Yes, definitely IndusInd numbers were pretty good and they beat the street expectation. I think worst is already priced in before we came into this quarter, and we've seen a good movement in the stock also. Valuation wise, stock is still not expensive, but the only concern is that again the management is talking about some name compression coming in this quarter. So I think they may be improving, but I think still they're not totally out of the woods because stock has moved also a lot. So some momentum may still be there based on such good numbers. But I think you've seen some part of it already playing into the stock.
Okay, Neeraj, hi, morning. Lots to talk about. But first, want to understand from you, why is SBI so tempered, even though the street is now willing to give PSBs, that margin of expectation at least after what we've heard from the private banking majors. But the last two trading sessions, SBI, which is still to report its numbers, has been under pressure.
See, what is happening is that, again, we are battling those risks that we had earlier, high crude, then inflation may go up again. We don't know how long this recent skirmishes which have started go to last. So there is some concern on inflation front there. And, whether again this can be another couple of months more of, crude going up and staying at high prices. But otherwise, it's kind of numbers which has come from some of the private names like ICICI Bank or some couple of PSU banks also. I think State Bank is very well positioned. It's definitely worth looking at for a 6 to 1 year perspective, even at these prices. But I think shorter term concerns are again coming back, and those are big risks for our markets. So let's see how that plays out.
Kunal, is SBI showing that kind of conviction on the charts, given what's played out with the entire banking pack ever since the start of this week?
Not really, Aisha. In fact, over the last, I think, few weeks or so, SBI has been either trending down or, at best, more flattish on the price action. When you look at this from the start of 2026, the stock was trading comfortably above the 1200 plus mark, and from there started a series of correction which has lasted now almost 6-7 months for SBI. In the process of doing that, the stock has consistently made a pattern of major lows and major highs for itself. So from the 1200 levels, there was a point when SBI had fallen down to almost 960 mark. It had broken the 200 moving average at that point of time also. The fact is that even at current levels, the stock is very, very close towards its long-term moving averages. So that setup for SBI is a little bit somber. I would not say extremely negative, because a major part of the correction now seems to be behind. But we need to wait for a breakout for the stock price. That breakout level for SBI is around 1100 mark. I think it's better to buy the stock on the terms of a breakout, because if we are expecting a breakout for the stock price, then we are looking at the stock trying to conquer back again 1200 plus levels. So the upside potential post 1100 breakout could be as much as 10% plus in the very near term.
Kunal, aside of SBI, what about other PSU banks, BOB, Bank of India? Are you seeing some momentum behind those stocks as well?
So there's a recovery which is at play for the tier 2 private sector bank, PSU banking names. For example, Union Bank was the one which fell to, I think, 155. That stock jumped up to 170, 175 in the last 5-7 days. You saw Bank of Baroda, PNB, Canara Bank, Bank of India managing to see almost like a 7 to 8% broad recovery in the last 4-5 days. Indian Bank was also another few names in the mid cap or tier 2 names which had recovered quite well post the results. Many of these PSU banking names had actually come back above their 200 moving averages by after being down by almost 10% to some of them even being 15% lower than their averages, which means what we are looking at is a mean reversion of sorts, or maybe the market's trying to just balance out because of that sudden weakness which you've seen for the private sector banking names. It's a process of churn which happens within sectors when one end of the sector becomes a little bit more skewed in terms of price action. But then I think the breakout point for SBI could actually be the leadership move, which I think the PSU banking stocks would wait out for. Just to go back in 2025, July, August, when the big move had started for the PSU banking names, it was led by SBI when the stock had broken about 800 levels, and then you saw a 50% move for the stock price. That leads a new life to the entire PSU banking names. So I would sense that without any leader, it's going to be difficult to call in for a big trend recovery for the PSU banking names. Hopefully, SBI can reshape that particular sector once again.
I just want to discuss DRL as well. And Neeraj, we were chatting with the management yesterday. The CEO, Erez, is Israeli, and he was talking about this semaglutide impact that they've had in the quarter gone by, saying that, it was delayed by about almost 3 to 4 months, the marketing for their semaglutide product, that is, amid the supply issues because of West Asia. They took a 240 crore rupee provision for semaglutide in the first quarter. More impact is what they're expecting in the offing. And the Middle East freight input costs dragged their margins by about 1%. And interestingly, we asked them about the tariff threat from Donald Trump as well, issued yesterday. And they're saying that it's not sustainable to move the production sites to US in a 2-year time frame, nor is it practical. How is it that you're looking at the investment climate within the pharma pack in light of what we heard on tariffs in the next 2 years?
Yeah, so basically, we saw a couple of numbers also coming yesterday, like Dr. Reddy, definitely, like you mentioned, were disappointing. And of course, there have been some negative news flows also coming their way in the last few days. And I think that after the tariff set which has come, though that may not sustain in the sense that it's still 2 years, there can still be a lot of to and fro. And second is that it's going to make cost high for the US consumers only. So there can be changes down the line to that announcement what has been made. But leaving that aside, we've seen a decent run in some of the pharma names. They've outperformed the market. Like Cipla came out with a decent set of numbers. But in the pharma space, I am right now still positive on the API and the CRAMS, that space. I think that is one space where, even though there are going to be some tariff set, but those ingredients, pharma ingredients will be always in demand from India, China. So India is also participating a lot in that demand. So, stocks which are concentrated mostly toward that will still do well as far as pharma space is concerned. Overall, there can be some volatility down the line for pharma, but I think stock specific, you'll still see action. Like I mentioned, Cipla, not expensive stock, very high ROC business. There is a very good India presence that they have. India business is doing very well. So there will be stock specific, movement that will still happen as far as pharma is concerned.
Fair point. Okay, Neeraj, stay with us. Lots more to talk about. We're going to take a very quick break. But as we do that, we had the chance of asking Ravi Dharamshi of ValueQuest Investment Advisors about what he makes of this entire tariff situation now. And he believes that tariffs are not sustainable, a strategy to bring investments in the US. He also believes that India has structural strength within pharma, which cannot be replaced overnight.
It reveals more about US, and it reveals more about the kind of hollowing out of the manufacturing base US has done. So as I mentioned earlier, US has debt, US has deficit. It needs to bring manufacturing back to US. And these are areas where they are dependent on other nations. So they need to reduce that dependence. It is being driven by that. Will they be able to do it? Tariffs will only provide a window to these guys to essentially bring that manufacturing base in. Now they want same companies to do that capex. It's not like it's going to give a birth to new generic company in US. I don't think an only American company having manufacturing base only in US is going to be able to compete with other generics. Now it is still not clear whether this is only about formulations or API or even intermediates. Which part of the value chain needs to be shifted? So it might so happen that some of the Indian generic companies might put up a formulation plant over there, and which might give them a lip service and do the last end of formulation and packaging over there, but everything else of meaningful substance is still manufactured over here. So there are ways around it, and I don't see, and by the time this comes into effect, who knows whether the current president of US will be around or not around. So it in fact reveals the kind of structural strength that Indian pharma has built, and it will not be easy to replace that or just pull it out from India and put it into US. So I think the same companies, it is a more a strategy change at the corporate level, corporate board level for Indian companies where they might have to put up one odd plant or something to showcase that they are putting up a plant over there. So it works as a diversification strategy for them, but I don't think the business is going to stop. And it will be only finally the US consumer that will be paying for it. So I don't see this as a sustainable strategy to bring the investments into US. You will have to make the conditions more better. People should feel the need to put up a plant in US, not because you're being forced to, because it makes economic sense.
Welcome back. And among all of the stocks which will be in focus this morning, it's also Sona BLW. Two Denso joint ventures is what they've entered into. The first JV is for high voltage traction motors, inverters for EV hybrids. Denso will hold a 51% stake in the company, Sona 49%. And the second JV is a two-wheeler, three-wheeler EV traction motor business, which is likely to be hived into a subsidiary. Denso is set to buy 49% of stake of that company at 1,750 crore enterprise value, and Sona will retain 51% and control. As a result of that, you'll have Sona BLW in focus for sure. And there you go. Of course, very, very early rates in terms of pre-open. Neeraj, Auto Ank and Sona in particular, any views?
Yeah, I'm positive about the auto ancillary space. I like companies which are getting to commercial vehicles because we see good growth in volume and production last year, and even first quarter update was pretty encouraging as far as commercial vehicles is concerned. So I'm positive on that space. Specifically, Sona BLW, I think there may be some reaction because of the news flow which has come, but stock's expensive, so I really don't look at stocks which are already trading at such high valuation, and which leaves very little as far as valuations are concerned. So auto ancillary has a space to do well, and if crude were to come down again, I think there'll be even tire companies which can do very well. Some of them have announced expansions also, so they can be short-term concern in tires. But I think that also is a sector one can look at investing in depth.
If you look at the electrification theme which is playing out in the auto sector, slowly and steadily many of the companies are getting that higher valuation for the electrification theme. Do you think, have you had a look at many of the companies, especially the two-wheelers pack where Bajaj, TVS, Hero, Ather, all are play?
I was looking at the valuations of some of these companies, like Bajaj, even though the stock has moved at this price also because the EV and the kind of policies which are coming. There was this policy announcement in Delhi about how soon they're going to roll out the two-wheeler registration. Non-EV will not happen, even three-wheeler space. So that would be positive for these companies. Valuation-wise, Hero Motor is very well placed. I think it's available at a very good valuation. It's a good dividend-paying company. For an investor, I think it will make sense in investing in a company like Hero Motor at these prices. Though there can be some short-term concern based on monsoon, but I think that's most of it is already priced in also into the stock. So I think I'll definitely play this two-wheeler EV space, and I think Hero Motor valuation-wise looks good, and even Bajaj Auto is decent in that.
How do you look at some of these AMC names, Neeraj? Nippon Life came out with numbers, good strong numbers that they've come out with, at least on revenue and profitability. I mean, probably some bit of it is mark to market as well, so something to kind of keep in mind. But UTI AMC also came out with numbers. And then you have SBI Funds, the new IPO, where the price has gone back to very, very close to the IPO price now, 584 at close yesterday. How are you looking at some of these AMC stocks?
Yeah, I'm positive on the AMC space because we've seen over the last 3-4 years the kind of growth which is coming, SIP growth, lump sum investment. They're growing every month, and I feel that the kind of results which is in NAM Nippon Asset Managers come out is also very good. And valuation-wise, though they've run up a bit, but I think still kind of growth that is there. I think even SBI mutual fund after the correction that we've seen post the listing, I think is a good entry point again, which is close to the issue price. I feel that this sector should stay strong and should be part of the portfolio because that growth is definitely going to continue.
I also want to quickly cover renewables as well. Just try and squeeze in a couple of questions. Neeraj, I know we've been timed out where you're concerned, but just if you can give us a perspective, how are you playing the renewables theme at this point of time? Waaree Renewables, again, very strong numbers when I'm looking at YOY, 53% revenue growth, 48% EBITDA growth, 39% PAT growth, margins at nearly 19%, holding strong.
I'm positive on the renewable space. So I feel that some companies have run ahead of valuations. But look at Premier Energy. They've been coming out with solid numbers every quarter. So I think there's definitely some steam left there. But I'm more positive on power generation companies which are developing these capacities and which are even into EV and even batteries, solar batteries. Companies like JSW Energy, you see Adani Green, the kind of capex that they're putting and the kind of capacities which are going to come over the next 1 or 2 years now, because earlier we were talking about 2-3 years. Now we're talking about capacity coming by FY28. So these companies have made that capex, and now is the time, the next couple of years, when you will going to get those returns from these companies.
Okay, Neeraj, thank you so much for joining us this morning. By the way, I want to quickly mark out some rates. Thank you, Neeraj.